Good afternoon, everybody. I welcome you today to a panel discussion on budget analysis. IMC YLF in association with Shailendra College. I would like to hand it over to Mr. Khorakiwala, President IMC, to give the welcome address. Over to you, sir.
Thank you, and good afternoon, fellow students of Shailendra College. It indeed gives me an immense pleasure to welcome each one of you to this interesting panel discussion on the budget analysis organized by the Indian Merchants Chamber Young Leaders Forum, jointly with Shailendra College. The Union Budget of 22-23 unveiled by our Finance Minister has laid a blueprint for country's economic journey over the next 25 years. This forward-looking budget provides a direction for the country's progress in the future and is laced with welfare orientation. Basically, the budget of a country is basically a financial story of the country and has to be seen in the context of strategy and direction the country has chosen. Because in 1 year, whatever the financial story that the budget unveils, it takes a long time for it to materialize, to implement, and to bring development in the country. So any budget is a journey, and the journey has to be consistent with the developmental goals, strategy, and direction that a country has sought to seek for itself. So the budget has to be looked at it from that perspective. The budget highlights the progressive vision for rapid infrastructure development through the Gati Shakti program that has the potential to create millions of jobs, create world-class facilities for easy mobility of people and goods, and reduces overall transportation costs. This Gati Shakti is a very major initiative taken by our government to connect railways, to connect roads, seaports, airports, factories, all across the country, so that the entire infrastructure, the coordination that takes place in building infrastructure the cost gets reduced. Today, our country almost pays 14% of our top line sales as part of our delivery costs in totality. Where in the rest of the world, the cost is about 7 to 8%. And that differential makes us very uncompetitive as a country for exports and for our domestic market. So this Gati Shakti program with the government has unveiled is a very ambitious program covering almost 16 ministries of our government, central government, which coordinates with each other to ensure that the infrastructure is built in a very seamless manner. So it may take many, many years for us to see the fruits of this Gati Shakti program. The MSMEs are also likely to benefit from the extension of the ECLGS by 1 year till March 2023. They were the most affected in the pandemic, as we all know. So government has done a lot for the MSMEs in this financial budget. The financial inclusion has received a boost with the proposal to bring 100% of 150,000 post offices into the core banking system. The government has used the post offices as our banking system to deliver immense benefit to our rural population. We are glad that finally the economists, businessmen are not giving that much importance to the fiscal deficit, which the government is trying to bring it down from 6.9% to roughly 6.4%. As long as the economy grows and inflation is reasonably under control with productive expenditure, we can well live with this deficit. The budget has made specific suggestions for spurring demand and investment in the economy, which in turn would lead to greater job creation. We need to move to a virtuous cycle of growth where sustained demand leads to a higher consumption, and the consequent higher capacity utilization leads to capital investment, which in turn leads to job creation and becomes a virtuous cycle. So it's basically a welfare-oriented and a forward-looking budget. In order to discuss this at length, we have lined up excellent speakers who would share their insights, and I'm sure it will benefit all the participants. I would like to thank Dr. Swati Pitale, Principal, Shailendra College, for providing this platform to interact with the students. Without much ado, I now welcome CA Deepak Gupta, Senior Fund Manager, Reliance Nippon Life, CA Kunjal Parekh, proprietor KC Parakh and Company, CA Shardul Shah, partner MA Shah and Company, and CA Girish Mahadalkar, HOD, Accountancy, Shailendra College. Before I conclude, let me just give you a small brief about the Indian Merchants Chamber. It's a chamber of commerce and industry in the country, which has a rich legacy spanning well over 100 years of excellent service to the trade, industry, and commerce. With membership base of over 5,000 members and over 150 trade associations affiliated to it, we cover almost 400,000 establishments all over the country. And I would urge all the students of Shailendra College to take interest in the Indian Merchants Chamber at a very young age. We have a lovely youth wing, as you all know, which has organized this program. So if you get involved with the Indian Merchants Chamber, I think it will be a very, very useful for you in your career progression and career growth. So as I said, it's now a cradle for nurturing young talents and promoting emancipation of women through Young Leaders Forum and Ladies Wing, which have become embodiment of youth, enterprise, positivism, and proactive thought leadership, and the movement for women empowerment and entrepreneurship. The theme for this year in IMC is Engaging Maharashtra and Building India. I once again welcome all the students and to this exclusive discussion. Thank you very much, and over to you, Dr. Swati ji. Thank you.
Good afternoon to one and all. I have the proud privilege to welcome the esteemed dignitaries for today's panel discussion on Budget 2022. I welcome User Purakiwala, President, IMC Chamber of Commerce and Industry. Warm welcome to Ms. Vidhi Doshi, Director General, IMC and IMC Youth Leaders Forum. I also welcome other panel speakers, CA Deepak Gupta, Senior Fund Manager, Reliance Nippon Life, CA Kunjal Parekh, Proprietor KC Parekh and Company, CA Shardul Shah, Partner MA Shah and Company. Dear friends, our college was founded by government employees in the year 1994 and has completed 25 years of its establishment. We have been re-accredited with B++ grade with a score of 2.98 by NAC. Our spectacular journey of last 25 years has witnessed remarkable achievements in academics, co-curricular and extracurricular activities. The college offers UG, PG and PhD programs. These academic programs are supplemented with add-on courses, value-added courses, MOUs with industry, study tours, industrial visits, national and international conferences and workshops. Our college has a sterling list of alumni who are CA, CMA, CS, and students pursuing higher studies abroad. It's a great pleasure to have eminent panelists today offering their valuable insights about the budget. The finance bill, popularly known as the budget, is undoubtedly a mechanism affecting an individual entity at the micro level and also the nation and its economy at the macro level. The study of a budget helps in understanding the narrative in nation's development and prosperity. There is a paradigm shift in India's position in the present global geopolitical context. India is poised to be a global superpower along with USA and China in the coming years. Shailendra College is looking forward to many more such programs in association with highly esteemed and reputed organizations as yours in order to foster our industry and academia linkage. I request Vidhi Madam to proceed with the introduction of today's panel speakers. Thank you very much once again.
Thank you, Dr. Swati. I would just like to introduce our panelists for today, the experts. We have CA Deepak Parekh, who is Deepak Gupta, who is a Senior Fund Manager with Reliance Nippon Life. Deepak Gupta is an All India rank holder chartered accountant, having worked with Indian capital markets for the past 16 years. Deepak Gupta has worked with large organizations such as Morgan Stanley, Lehman Brothers, and Nomura India. He has also worked with boutique international funds such as Progress Capital Limited. He has been working as Senior Fund Manager with Reliance Nippon Life Insurance for the past 3 years, where he manages equity ULIP funds for the organization. We are also delighted to have with us today CA Kunjal Parekh, proprietor KC Parekh & Co. Kunjal is a practicing chartered accountant with over 12 years of experience. Her areas of expertise being tax compliance, advisory, and auditing. She is an alumni of HR College of Commerce and has completed her articleship from S.V. Gatalia and Associates. She is also taught at the Jai Hind College. Also extremely privileged to have with us CA Shardul Shah, partner M.A. Shah & Co. Shardul is an LLB from the University of Mumbai and has completed his PhD on the topic of royalties and FSTs. He has been a regional council member of WRC of ICAI for 3 terms and is the chairman of the Finance and Tender Committee of the Mumbai Cricket Association. He is the secretary of the Indo-American Society and the co-chair of the Young Leaders Forum of IMC for this year. Also extremely privileged to have with us as a moderator for the session, CA Girish Madhalkar. Sir is the head of Department Accountancy, Shailendra College, and needs no introduction. Sir, along with CA, has also done his MBA in finance. Sir has 24 years of post-qualification experience as a practicing chartered accountant, 17 years of teaching experience with the college. He has been an examiner and chairman for paper setting at Mumbai University, an examiner for CA Intermediate and CA Final papers. He is also the recipient of the prestigious National Talent Search Award from the Indian Accounting Association for valuable contribution to accounting education. I will hand it over to Girish sir to take it ahead from here. Thank you so much, sir.
Thank you. Thanks a lot, Vidhi madam. So without wasting any further time, we'll start with the sort of questions that I have. We have 3 panelists here. CA Deepak Gupta, CA Kunjal Parekh, and CA Shardul Shah. So I would be possibly getting the questions in for all the speakers. So we start with CA Deepak Gupta. The first question is on capital markets. After the introduction of the budget on 1st February, the market was possibly up immediately for a couple of sessions and subsequent sessions also. How do you see the impact of this budget on the capital markets in the near term and mid-term? Yes.
Sir, we are not able to hear you, Mr. Gupta.
Unmute.
No, your audio is not.
Just one
Yeah,
minute.
now
Can you hear me?
Yeah.
Hi, good afternoon, Girish, and to all the students of Shailendra College. Thank you for giving me an opportunity to present here and to discuss the union budget. As Girish, you mentioned, the markets like continuity. Equity markets and capital markets like continuity in anything, and they don't like surprises. One thing which the government has done in the last few years is that they have taken out the surprises from the budget. So while markets, whenever the budget is announced, market goes with a lot of preparation that the budget will have some amendments which will not be very favorable for markets. And in the last few years, those preparations have not really worked out in terms of the union budget does not spring any nasty surprises. There's nothing in the fine print which makes us feel that there were negatives in the budget. And the budget is largely growth oriented and is very focused on ensuring that India bounces back faster than other emerging economies from the impact of COVID. COVID has obviously devastated the entire nation and the entire world, and all the economies have taken a big hit. And in that perspective, it's basically in the hands of the government to ensure that spendings come back, to ensure that GDP growth comes back to what it should be. And the government has been focusing on that. So the markets have taken the budget very positively because there was no surprises in the budget. There were no negatives in the budget. There was continuity in terms of ensuring that the government continues to spend so that the fiscals and so that the GDP bounces back. And they're not really focused that much on fiscal deficit consolidation, which was the focus before that. If I just take you through some data points, India had a fiscal deficit of almost about 6.5% when the Lehman crisis happened in 2008, 2009. And when the Modi government came in 2014, fiscal deficit of the country was at about 4.5%. And from 2014 to 2019, the fiscal deficit went down from 4.5% to 3.4%. And the government was intending to get it down to below 3% in the coming years. And then COVID hit us, and the fiscal deficit went up from about 3.4% to almost at about 6.9 to almost about 6.9%. And the government is aware that the fiscal deficit is running high, but they want to ensure that that the economy does not get derailed. And for ensuring that the economy does not derail, there's continued capital expenditure taking place, and it is ensuring that, and hence fiscal consolidation has taken a backseat, and the focus is more on recovering of economy. And this is what markets like, and therefore the markets have given a positive reaction to the budget. Girish, I think you're on mute.
So please unmute.
Fine. The next question is to CA Kunjal Parekh, madam. It is regarding education. There were certain provisions in respect of certain reforms in the union budget regarding education, particularly higher education. So how does it impact the overall process of higher education with respect to current pandemic-related online education?
Good afternoon, everyone. Thank you for this opportunity, and thank you for the question as well. Firstly, I'd like to say that the pandemic has exposed, this vast digital divide which we are facing. Saying that whether you are in the semi-urban, urban or rural area, you have had a loss of learning. There has been a loss of learning as a whole. So due to the COVID protocols and the pandemic, the importance of technology and remote learning has been highlighted. Also, having said that, the government has come up with skill development, which is a digital ecosystem for skilling and livelihood, which is a portal which will be set up and launched, where the citizens can skill, reskill, and upskill through online, training. Also, universalization of quality education, as in the regional languages which will be provided. So they will be, so many children have not been able to go to school and colleges because of this. And from 12 channels, TV channels, they are going to come up to 200 TV channels where they are going to provide with the, the supplementary education. Also, there are vocational courses which are going to be provided, and also a digital university is going to be set up, a world-class digital university, which is going to provide personalized learning experience at your doorstep. So it's going to be, it's a fantastic initiative by the government, and let's wait and watch what we can get from that. Thank you.
Okay. Now I have the next question directed at Shardul Shah, sir. It is regarding the cryptocurrency or crypto assets. It would be better called as assets because it is not strictly currency as such. So now they have taxed the crypto assets at 30%. Does it amount to legitimizing the crypto assets? And we have RBI, Reserve Bank of India, also having a digital rupee. How it is going to be different from other crypto assets like Bitcoin, or for that matter, Ethereum, Solano, Cardano, and so on and so forth? Yes.
So, respected principal of the college, Dr. Swati, respected president of IMC and all the office bearers of both the organization, respected chairperson of YLF, Vidhi, and all the co-panelists also. And thank you so much, Girish sir, for the opportunity given to all of us to be here for an excellent panel discussion organized by our college. Sir, as you all know, that this asset, which is virtual digital assets, which are popularly called as cryptos, have gained popularity across the people, right from the college students to maybe the youngsters. And this is the reason, because of the sheer popularity and also volume of transactions, that volume of transaction of trading of these virtual digital assets have now increased exponentially. As of today, friends, there is no provision which is or there is even no law which is prescribed by the Reserve Bank of India to regulate the cryptocurrency. To further extend it, friends, actually anywhere in the world to regulate cryptocurrencies. So to say that India as of today has a law on cryptocurrency is in fact, countries around the world will have to collectively sit together and thereafter come out some kind of commonality such that a unique law to regulate cryptocurrencies, if at all they wish, that can come out. But there is no law, especially in India, to regulate cryptocurrency. Further, friends, to say just because the Union Finance Minister has proposed a tax on the cryptocurrency, does it make it legitimate? Answer is no. The Finance Minister proposes to levy a tax on transfer of any of these virtual digital assets. In fact, a specific definition is also provided under section 247A as to what these what these virtual digital assets mean. Now it means any information or code or number or token generated through cryptogenic means by whatever name called, providing a digital representation or with or without consideration, with the promise to represent or having any inherent value, or functions as a store of value or a unit on account, including financial transaction or investment, but not limited to investment scheme, can be stored or traded electronically. Just imagine, friends, the definition prescribed under section 240 is so wide, and it also covers NFTs, that is the non-fungible tokens, and other tokens of which could be notified in the definition. So what I'm trying to say, friends, is although the Finance Minister talks about taxing these virtual digital assets, it talks about any transfer of these digital assets will be liable for a taxation of 30%. Not only that, they're talking about a TDS of 1% on the transfer as well. Further, they are saying, friends, that if you get any gift, if you get so the recipient will have to pay the tax of any gift above 50,000 rupees of any of these virtual digital assets which you get. So what I'm trying to say is the government has put a very, very high rate on any of these transfer of virtual digital assets, but unfortunately the government, as far as GST is concerned, see what is happening, friends, is just a few months ago the GST department carried out a lot of searches on these digital platforms which were giving out the digital currencies. Not only that, the department thereafter also carried out a lot of searches on these platforms. So what we need to know is whether these digital considered as a property or whether they will be considered as a service. So this again dilemma is not by the government of India, and I'm sure in times to come the government will also clarify whether these are actually property or whether they are considered as services as far as GST is concerned. Now coming to the virtual or the digital rupee which the government of India is talking about, friends, details of the same will be brought out by the Reserve Bank of India separately. What I'm see is there will be a more detailed law which will come out first, and thereafter the government of India will come out with that. To say that the digital rupee will be the same as the currency which we are using today is absolutely unknown. Even the are not known to most of the people. But one thing is very clear, that the government of India wants to come out, more proactively this particular kind of assets, and we must give credit to the government of India, because bringing out a taxation generally is always a stepping stone towards a direction whereby at least the person who trades in it, as well as the person who is giving the platform for it, some kind of recognition for the same. So I think it is not far away in this year, that is 22-23. I'm definitely sure the Reserve Bank of India will bring about guidance of how these virtual currencies are going to be accepted or regulated. At the same time, we will get to know more about the virtual digital rupee. So with these few words, I would like to hand it over back to the moderator. Thank you.
Okay, fine. So the next question is directed to CA Deepak Gupta. It is regarding the startups. Now, there may be some provisions in which we would have some positive impact on the startups, and some of them might be affecting negatively, adversely. So can you just throw some light on the provisions affecting the startups? I think you are muted. Please unmute. Gupta ji, please unmute.
Yeah. Sorry, I was not allowed to unmute. Okay, so there are right now about 61,400 startups in the country, as per the Department of Trade and Promotion, which captures the data, and almost about 14,000 startups have got added in the last financial year. Now, government has been extremely positive on the outlook for startups and has given them tax rebates or tax concession, and that has been extended for another year. Apart from that, it's basically ESOPs, which a lot of these employees get. On that, one has to pay surcharge, and surcharge earlier, and not just for ESOPs for employees, but surcharge on all financial products, excluding equities, was being included as a part of your income, and they were getting taxed as high as 37% if you fall in the high tax bracket. Now, the budget has decided to cap the surcharge, which is in line with what you pay for equities. And that has been extremely positive development. Other than that, the government has also recognized startups in the rural space, which can get funding from government organizations such as NABARD, which is extremely positive because there is a huge amount of growth opportunity available on the rural side. Other than that, there has been no negative coming per se from the budget towards startups, while the wish list of startups are always extremely high, where they're asking for more concessions and more steps. But looking at the strained balance sheet of the government, they have tried to do the best that they can in the given circumstances. And one must applaud them for that.
Fine. Thank you. Okay. Now, the next question is directed to CA Kunjal Parekh, madam. It is regarding healthcare. What does that digitization or digitalization in healthcare sector mean? And how does it, the recent reforms by the government undertaken mean for the people in India in general, common man in India?
Thank you, sir, for your question. The finance minister, with Ayushman Bharat digital mission, as she has mentioned in the budget, has come up with two major reforms in the healthcare sector, which are very, very vital in today's world, today's times. The first one is the National Digital Health Ecosystem, which is an open platform which will be rolled out. It will provide, it will consist of digital registries from health providers and digital facilities also. Also, a unique health identity number will be given to the users of this facility. Also, it will be, and everyone will have universal access to these health facilities. So the government is trying to facilitate that everyone gets these health facilities by launching this reform. The second one is the National Tele Mental Health Program. Mental health, as we all know, has a lot of stigma attached to it. So this is a very welcome initiative from the government. The National Tele will have, people will have better access to quality mental health counseling and care services. Also, they will have support, short-term and long-term support. Also, 23 tele-mental health centers will be set up across India. So I think the government is moving with the times and going for where they need to do the sectors where they need to improve on. So I think these are the two great initiatives and reforms taken by the government. Thank you.
Okay, thanks a lot. Thanks a lot. So the next question goes to CA Shardul Shah. That is regarding the surcharge levied in this current budget on long-term capital gains on various assets, including the financial securities as well as the real estate assets. Can you throw some light on the changes happening in this budget?
So, sir, this is a very welcome step which was introduced in the Finance Bill 2022, and the Minister has rightfully thought of this. What used to happen, as you all know, friends, is, our high net worth individuals not only pay a high rate of income tax, but there is a very high surcharge also applicable. As of today, as far as equity, asset classes were concerned, or equity investments, including equity mutual funds, were concerned, the rate of surcharge applicable to all of them was. But just imagine a scenario of a high net worth individual which has an income over 5 crore rupees. He used to pay a surcharge of 37%, and the rate of tax almost used to go to 40 to 43%. And this was a discouragement for other asset classes. For example, as Deepakji rightly mentioned, startups, or even I would say any other kind of assets which are other than assets. And hence, in all these kind of class of assets, the rate of surcharge was very high. I think now the budget has proposed of capping of surcharge to 15% on long-term capital gains on all kinds of assets, irrespective of the amount. This is a very, very significant move, because this will encourage more and more investments in other kinds of assets. Because what was earlier happening was only because of equity shares and equally mutual funds, this was happening. But now for other class of assets also, this will be happening. And this, I think, will encourage more and more investments into other kind of equity assets as startups and maybe other forms of. Very positive step, and we must acknowledge the Finance Minister for this move. Back to you, sir.
Thanks a lot. Fine. So the next question is pertaining to the capital expenditure, huge capital expenditure made by our government of India, and how is the budget going to take our country, India, in a very big way towards its achievable target of $5 trillion economy in the next decade or so. So what are the provisions of the budget which would possibly put India on the roadmap towards $5 trillion economy? Yes.
Thank you, Gilji, for a question.
Sir,
Thank you, Gilji, for a question. So capital expenditure is the backbone for GDP growth. Now, India has seen its GDP growth in high single digits for the past few years, but it obviously saw a big hit when COVID happened. And currently, India's GDP is roughly about $2.8 to $3 trillion, looking at the way currency goes. And a $5 trillion target for 2025 seems very challenging. given the fact that RBI has given a forecast of about 7.8% for FY23, and the closing for the fourth quarter of 23, they're talking about GDP growth rate of 4.5%. And hence the GDP growth has from a high single digit is coming down to low to mid single digit. Now, for that to recover, there has to be more impetus on capital expenditure, because capital expenditure has a big derivative on other expenditure. So what government spends about 100 rupees on capex can lead to almost about money circulation can go up to almost about 5x of that, to about 500 rupees. And hence government has put a lot of impetus on capital expenditure in the last few budgets. So if I just give you some numbers, before COVID, our government was spending about 12 to 13% of their total spends on capital expenditure. That has increased now to about 19%. Government had spent about 40% growth in its capex in FY22. And now that capex has gone up to capex has further increased by 25% for FY23. So there's a lot of focus on spending money on capex projects, especially on improving the infrastructure, be it on road, be it on infrastructure, be it on railways, be it on port, and that can lead to a money multiplier effect in the economy. So hence the $5 trillion target may not be achievable in 2025, seems very challenging now. But by 2030, there's definitely a possibility of touching that target. And hence the budget has put a lot of focus on improving the capital expenditure and increasing it, because unless government spends, the private capex will not pick up. And government has to act like a big brother. They have to tell the private sector that main hoon na, and spend money. And that will encourage private sector to come and increase their capital expenditure, which will create jobs and which will have a multiplier effect on the economy. Thank you so much.
So please unmute.
Okay. Okay. Yeah. The next question is for CA Kunjal Parekh regarding Gift City. Now, what are the new developments with regard to the Gift City, and how will it help the youth of today in the Indian as a pan-Indian context, in the pan-Indian context?
Firstly, thank you for the question. I'd like to say, firstly, I'd like to introduce what is Gift City. What does it stand for? It's the Gujarat International Finance Tech City. It was set up in 2015, and it is in Gandhinagar, Gujarat. So the government has always given a lot of, tax incentives for this city. Be it in trade securities, mutual funds, alternative investments, relocation of offshore funds. But now they are taking it to a different level. They are making these incentives further. They are taking them for business and investments in gift cities, which none of the global investors can ignore. They are bringing in world-class foreign universities and institutions will be allowed in the gift city to offer courses in financial management, fintech, science, technology, engineering, mathematics, free from all domestic regulations. Also, accept the regulations of the International Financial Service Center. This will create and facilitate the ability of high-end human resources for financial services and technology. Also, the International Arbitration Center will be set up in the gift city for timely settlement of disputes under the international law. Services for global capital for sustainable and climate finance in the country will also be facilitated in the gift city. Thank you.
Fine. Thank you. Thanks a lot. The next question is for CA Shardul Shah. That is regarding the recent proposed changes insofar as the rectification of income tax returns. So how would you see it? The proposed changes in the current budget on the rectification of income tax returns.
So what budget prescribes is very a forthcoming move. Today, what is happening, friends, is when you file an income tax return, you can file your belated return or revised return more than 2 years in the past. Kind of a continuous disclosure scheme which the government of India is planning to come out. I think scheme which says that if you have failed to furnish your income tax return for any period, either means they allow you to go all the way 3 years in the past. So if you have failed to furnish your income tax return for whatever small reason it could be, you have missed out on your rental income, or could be your bank interest or whatever, you can definitely file an updated return. That's what they're talking about. And this updated return can be filed. So what they're saying is, over and above the amount of income tax which you have to pay, there is a particular amount which will be levied to you. In case the amount, you have missed out filing your income tax return and the expiry of time is for a period of 12 months from the end of the assessment year. Assessment year is the year which follows the financial year. So if you have missed out that for 1 year, about an additional surcharge, additional tax of 25%, and to pay interest above that. And also they're talking about, in case you have failed to file a return for 2 years from the end of the relevant assessment year, then they're talking about an additional income tax payable of 50% of aggregate tax and interest on the same. Please remember, friends, that although they are talking about a leeway which is available to you for those who have failed to furnish the income tax return, there are a lot of exceptions to the same, thereby that in case there is a search which has happened, or in case there is a case where there is for example, money laundering case, Benami, etc., notices have already gone to you, then in those cases you will not be able to return. Also, please remember, friends, this updated return can be filed only when there is an additional payable by you. So in case of a scenario where you want to claim an interest, or if there is a only you want to file an updated return, that is not permitted. So the government, although has given a good window for a period of 2 years over and above one assessment year, they have also put a cost to that, and hence you will have to see what is the benefit, cost benefit analysis. But definitely, being a law-abiding citizen, I think is an opportunity for you to file the returns in case you have missed the same. Thank you. Back to you, sir.
Okay. Thank you. Thanks a lot. So now the next question goes to C. Deepak Gupta ji. Now we have been seeing from last 7 years or so, from 2014, there has been consistent revenue growth. However, in terms of the macro level of the government, revenue growth has been consistently improving or increasing. In spite of that, we find a consistently high fiscal deficit. So how do we explain this paradoxical situation?
Right. Girish sir, as rightly stated by you, revenue growth has been consistent. Your tax revenue growth has been quite strong, but your non-tax revenues, be it your disinvestment targets, as well as one-time fees which the government receives, be it on selling telecom spectrum or licenses, that has not been keeping up the pace with the growth that you're having on the revenue side. Apart from that, your expenditure requirement continues to be extremely strong, especially during COVID, where you have to support the economy to revive the growth. And hence, government hands are tied, and they have to improve expenditure compared to what they are doing on the revenue side. So while revenue growth has been strong, still the number of tax filers, number of individual assessees who pay tax is extremely low in this country, which is still ranging at about 2 to 4%. and hence government needs to continue to spend, and which is why we're running a high fiscal deficit. I must mention over here that despite running high fiscal deficit, government has clearly spelled out the fact that they would be looking to ensuring that the fiscal deficit comes back to the manageable level by FY26. So right now we're running fiscal deficit of about 6.9% for FY22, which will go down to 6.4% in FY23. But they're still talking about fiscal consolidation by FY26 to come down to 4.5%, which is commendable. So they have one eye on the fiscal deficit, while at the same time they're also supporting the economy by ensuring that they continue to spend so that the economy recovers faster than expected. Thank you.
Thanks a lot. Thanks a lot. The next question is for CA Kunjal Parekh, madam. It is regarding the gem and jewelry sector or industry in India, which is very important and it contributes substantially towards the India's GDP. So what would be the impact of reduction in customs duty in this particular budget, on this particular sector, gems and jewelry sector?
Firstly, the gem and jewelry sector contributes around 6 to 7% of the GDP. It is a very, it's labor intensive. So it employs around 2.5 million workers. It is one of the fastest growing industries in our country. And it is also very export oriented. The government, to give a boost to this sector, they have reduced the customs duty on cut and polished diamonds and gemstones from 7.5% to 5%. And to facilitate the export of jewelry through e-commerce, a simplified regulatory framework shall be implemented by June this year. So time will tell how it's going to impact us. Also, to avoid the dumping of the subsidized and the subsidized imitation jewelry, they have prescribed a manner in which they will a duty of rupees 400 per kg is to be paid on the import, and hence cheap and subsidized imitation jewelry will not come to India. So the government has taken very good measures for this.
Fine. Thanks a lot. So we come to the next question, that is regarding, it is for CA Shardul Shah. It is regarding the changes in the disallowance of expenses in contravention of laws. So how do we see it with reference to the provisions of the current budget?
Thank you, sir. I think these changes are very, very pertinent, sir.
Yeah.
Specifically addressed to the medical fraternity and also the pharmaceutical companies. As you all know, friends, the pharma companies used to give out a lot of fees to the doctors, through the MRs and through various other routes. Not only that, these pharma companies also had to settle a lot of their disputes in other countries. For example, in America, because the US FDA is very, very powerful there. Which you do under US FDA or in the European laws, and if you do not pay up that same penalty, then you cannot actually do the business. So they are actually very forthcoming in Europe that these are the discrepancies, and if you are ready to settle and it's like an arbitration or an out of court the penalty, there's no problem. You agree to the same and you can go free. The Indian companies, obviously large Indian companies, had violated some of the laws, local laws in European countries, in American companies, and also had to cough up billions of dollars to settle these. What the Indian courts were regularly taking the plea was, since this expenditure was during the course of or this was for the purpose of trade, there is a particular section 37 in the Indian says that section 37 actually allows such kind of expenditure which is for the purpose of business. At present, section 37(1) provides for the allowability of expenditure which is wholly exclusively for the purpose of business or profession. Explanation 1 to section 37(1), which says that any expenditure which is an offense, so something which they have brought about a change now, they are talking about any expenditure which now the Indian businesses are going to take. So this is from assessment year 22-23, meaning applying from 1st April 22. That is, any expenditure with any Indian company will do offense or which is prohibited of law. When they're talking about law now, they're saying law of any country. Just imagine, it will be deemed an expenditure which is not allowable. Now, this is very, I think, very far-reaching, because they are talking about any expenditure which is incurred for the purpose which is offense or any law, even India or outside India. Any benefit, they're talking about one step ahead for the doctors also. For example, a perquisite provided to a person, whether or not carrying on the business or profession, whether is in violation of any law or rule or regulation or guidelines, and the expenditure incurred, for example, for compounding this expenditure also, all these expenditures will not be allowable. So the government of India has realized that there were certain decisions of High Court as well as certain decisions of Supreme Court which said and brought about a kind of a scenario which the legislature never intended to think of. To some extent, I agree with these changes, and these changes are rightful in a very ethical and positive direction, and these changes are something which we all remember. This applies from 1st April 22. Thank you. Back to you, sir.
Yes. Thanks a lot. Now, the next question is for CA Deepika Gupta ji. That is regarding, the question is pertaining to dividends from foreign companies. Why did the government abolish the preferential tax rate on foreign dividends earned by the group companies abroad? So, with reference to the current budget, how would you like to explain this?
Sure. So what used to happen, sir, was that as per section 115 BBD, any dividend that Indian company which has a foreign subsidiary and the dividend gets transferred to India, they would get to pay a preferential rate of 15%, while the company income in India is being taxed anywhere between 15 to 25% plus surcharge. Now, there was obviously a preferential treatment given to companies who had foreign subsidiaries. Now, government has in the last 3 years has spoken a lot about Atmanirbhar, spoken a lot about PLI schemes, focusing a lot on indigenous manufacturing and putting India first ahead of everything. And this is, I imagine, is just to ensure and streamlining that the focus of Indian corporates are towards increasing manufacturing capabilities of the country, rather than setting up subsidiaries and trying to create profits from businesses outside the country. And if you're creating profits outside the country and you're repatriating those profits into the country, then you have to pay full tax that the country is supposed that what you're supposed to pay at the country, which is why they have done that. Thank you.
Okay, thanks a lot. The next question is directed to Kunjal Parekh madam. That is regarding the Gati Shakti initiative, which was highlighted and given much importance in the current budget. Now, thanks to this pandemic situation, our domestic trade, not the international one, domestic trade had been at a standstill, at least partial standstill, though not a complete standstill. So the attempt is to possibly encourage the domestic trade within India. So how is the railway logistics, inward logistics, outward logistics going to help through the initiative of Gati Shakti? And how would it affect in the near term and in the medium term? Yes.
So firstly, let me explain the pre-independence and post-independence rail logistics. So our dependence on rail logistics pre-independence was immense. Now, post we have changed. We are moving towards dependence on roads. which is a very expensive and also a very time consuming way. We also have, they are setting up basically dedicated freight corridors for faster and cheaper transport of goods and people. Also, hence the focus on rail logistics. Now, Gati Shakti was launched in October 21. Let me give you a small example. What if you want to set up a logistic park in Aurangabad? You will, you will have to take so many permissions and so many 50 types of permissions from different state as well as central governments. So that will, the gestation period of the project will be very, very high. Also, there will be delay in. So to get everything under one roof, the government is launching a national master plan, which is the Gati Shakti, which will have a portal which will be made by ISRO, and it will give the government a bird's eye view as to how things are working. Also, so the government sectors, they work in silos. They today, if you set up a plant for a power plant in Pune, you have a land, you're setting up that power plant. After 5 years, you may realize the water department has, going to build a canal there. So hence this portal or this will help the government to streamline this whole process and give us a better, clearer picture. Also, to answer your second question as to how the long-term and the short-term process, how this process will work, any yield of investment in infrastructure generally gives a return in medium or long-term time period. So in the short-term time period, we will know how to plan, how the investors can plan this, how the investors can plan their investment into this sector, into this whole Gati Shakti reform. So that is my view on Gati Shakti.
Okay. Thanks a lot. Thanks a lot. The next question to CA Shardul Shah is regarding the provisions, if any, in the current budget on charitable trusts, because charitable trusts are going to be a vehicle for a lot of social service, social development, and social justice. So any provisions pertaining the budget for charitable trusts?
Friends, as you all know, the Indian talks about two sections to give benefit under charity. One is a section called 1023C, and second section are under section 12A. So the government of India now tries to streamline the provisions such who can now take benefits either in either of these sections. They don't want a particular trust or a not-for-profit organizations duplicate their registrations. So this is the mindset under which the various amendments have brought into play. So you try to take one registration and try to take as many benefits under the same, and they have also tried as many amendments such that most of the changes are same. So whatever benefits you are getting under section 1023C, similar kind of provisions are also going to be applicable under section 12A, and also same kind of requirements and same kind of benefits you will get. But you will not be able to get duplicate registrations and duplicate benefits. Also, a very important change which is proposed in the budget of 2022, friends, is you are allowed to spend 85% of your expenditure, and also you are allowed 15% of the expenditure. So you can collect whatever amount during the course of the year. If you do not spend the same during the piece, around 15%, you can carry forward the same over a period of time, that is 6 years earlier. Now what the budget is proposing, that if you get a period of 5 years, in the 5th year itself, that amount which is not, you are not being able to spend, is taxable. So this is an important change for you, which we all have to remember. Second, which also they are saying that in case of a trust or a not-for-profit organization, you always receive the money for a particular cause or a particular, if you do not fulfill the same, or you accept the money over a period of time and you do not that particular cause or that expenditure over a period of time, only to that extent that amount not allowable expenditure. Meaning to say that, for example, you have a particular reasons which are mentioned in your memorandum of association or also your trust deed towards the object clause. If you do not, if you slightly diversify or you do not do that towards the object of the clause, then to that money will become not allowable by the trust. Further, they are also talking about the penalty of diversion of income or any expenditure by the trustees. So a lot of onus is now given on the trustees or the people who manage the trust. So if there is now proposed of a heavy penalty for diversion of income towards the trustees or the benefits, I think this is a very, very positive step. Also, they are now becoming very careful. The government is proposing that yes, maintenance of books of accounts, maintenance of various these books have to be properly kept by the trust, and if the same, then it is again a lot of heavy penalty is put on the trust and the trustees. I think this is a very positive step. We're not having a lot of governance practice, and this will increase the transparency and the governance as far as the trust is concerned. As you all know, friends, since last year, in fact, I would say 2 years, all these trusts have to be re-registered. So in case any trust or not-for-profit organizations which are not re-registered, please ensure all these trusts are re-registered, because now there will be a provisional re-registration number given to you, and the validity is only for 5 years. Earlier, once an exemption certificate was given, it was for perpetuity or for an indefinite period of time. But since last year onwards, you have to re-register all these not-for-profit organizations. So these were some of the important amendments or changes as charitable trusts are concerned. Thank you. Back to you, sir.
Okay, thanks a lot. Thanks a lot. Anita, madam, I have finished with these questions. Now, do we have some time so that we can take up some questions from the chat box?
Yeah, we can take 1 or 2.
Okay. Fine. There is a question from one of the participants. What are the reforms pertaining to agriculture and allied activities in the current provision, some of the provisions of the current budget? Anybody of the panelists can answer this.
Hi. Girish, surprisingly, this budget, it was expected to be a populist budget, given the fact that there are 5 state elections around the corner, with UP being the largest state, and Rupee has a large proportion of rural population which is into agriculture sector, and there would be a lot of populist measures that will be implemented. The government didn't go to that route. In fact, the agriculture budget, which is at about 1,35,000 crores of expenditure, has just increased to 1,38,000 crores of expenditure. So just about 3,000 crores of expenditure additional. So they didn't really spend. They are not really giving any freebies in this budget towards the agriculture sector, which was the norm in the past few budgets. Apart from that, the only other reform that government has spoken about is on oilseeds, because oilseeds play an important role in the manufacturing process, and right now we're dependent on oilseeds which are imported which are basically imported from other countries, and government is putting impetus of manufacturing of oilseeds in the country. But other than that, this budget didn't really have much for the agriculture sector per se, which was taken very positively by the markets and by all the industry experts.
Okay. Yes.
So I would like to only add on to what Deepak ji already said is this. I particularly found very interesting the budget. The finance minister talked about a measure where the government wants to ensure that the farmers have chemical-free agriculture. So, they are now trying to incentivize more and more farmers towards going more natural, and they want the sowing chemical free. So this was something which I found very unique, and how the government of India is going to push for more organic or more natural way of doing farming. One more interesting point which I found in the union budget, friends, was what the union budget now talks about: more and more direct benefit transfers to the farmers. In fact, this budget talks of almost 79% of the allocation towards the agriculture. They are talking about direct benefits to the agriculture. So, they're trying to at regular, increase the MSP, which is the minimum support price. Because a period of time, there were a couple of agricultural, amendments which were brought, but farmers' protests in Punjab, etc. These laws were taken back. So the main concern of those farmers were that the minimum support price is something which has to be decentralized, and it's something which can be controlled by the farmers itself. So a very positive move by the government is now at regular intervals, the MSP or the minimum support price of the farmers will be taken up. Thank you.
Okay. Thanks a lot. Thanks a lot. So I think we are through with the questions. So I would take this opportunity before handing over the formal vote of thanks by Sheetal Kalro, Madam. I would like this opportunity to thank the Indian Merchant Chamber President, Mr. Khorakiwala, Mrs. Vidhi Doshi, Madam.
I'd just like to take this opportunity to thank Dr. Swati, Principal, Shailendra College. Thank you very, very much, ma'am, for giving us this opportunity. Also like to thank CA Girish sir for moderating this session so wonderfully. All the students who've joined in, thank you very much. Would also like to thank Mr. Khorakiwala, President, IMC Chamber of Commerce and Industry, for coming in and giving the welcome address and being with us here today. Also, Mr. Ajit Mangrurkar, Director General, IMC Chamber of Commerce and Industry. Ms. Sheetal Kalro, who's the Deputy Director General, IMC Chamber of Commerce and Industry. Mr. Sanjay Mehta ji, who's the Deputy Director General of Commerce and IMC Chamber of Commerce and Industry. And also Ms. Anita Nayak, who's the officer in charge of the IMC's Young Leaders Forum. So big thank you to all of them. Thank you to all the students of Shailendra College again. And I would like to invite Mr. Mangrurkar to give the vote of thanks.
Thank you, Vidhi ji, and good evening, everyone. It is my pleasure to present this vote of thanks after a very interesting panel discussion on budget analysis. In fact, this is something which at IMC, the Young Leaders Forum, we are wanting to do with different colleges, different institutes to integrate industry and academia in something which is as important as budget. In fact, the budget analysis is something, it's not only meant for the television, it's also meant for students, it's also meant for the youngsters. Finally, is the youth of the country that need to understand what the budget is. So this is something which the youth wing of the IMC, which is headed by Vidhi and Shardul, and of course looked after by our Deputy Director General Sheetal Kalro. We're trying an endeavor this year to keep on integrating the youth, and we really urge everyone to come and join this movement, because finally India of tomorrow, India of today is the youth. And I think if we don't integrate youth into the main wing, it's just not going to be a very composite integration. Having said that, I think the last 2 years have been very difficult, as the COVID-19 pandemic has not only changed our lives in many aspects, but has actually opened a Pandora's box for us and shown us where we as a nation stand with regards to many important areas, namely quality healthcare, infrastructure, transportation, education, and employment, to name just a few. We have observed a sharp drop in GDP. Therefore, an overhauling in the budget is what we needed, not only to get back on track, but also to set a steady pace for growth and sustainability. Our experts today have given us a wide analysis of the budget, and I personally do believe it's an inclusive budget which will set the pace for a more progressive India. I hope this discussion was fruitful and has made you all more aware of the conscious efforts of the government for growth and progress of this country. Coming to IMC, we are proud to mention that we have a dynamic Young Leaders Forum, which I was just talking about, which provides opportunities to network, associate, and interact with various industry leaders, budding entrepreneurs, and much more. One such event is our future Youth Conclave, which is going to be held in June of 2022. And this is something I urge all of you to participate and be a part of. This is our flagship event of the Youth Wing. And in fact, we started it last year and it was a very big success. And we hope this year we'll take it to greater heights. I encourage you to join our Young Leaders Forum. That's a way where youth can integrate with industry leaders and be a part of the think tank, or be a part and have your voice heard, as we call it. On behalf of IMC, I would like to thank Dr. Swati Pitare, Principal Shailendra College, for providing us this wonderful platform, madam, to interact with students, and would be happy to take this association forward. I also wish to express a deep sense of gratitude to our eminent speakers, CA Deepak Gupta ji, Senior Fund Manager, Reliance Nippon Life, CA Kunjal Parekh, Proprietor KC Parekh and Company, CA Sardul Shah, Partner MA Shah and Company, and of course, our very own co-chairman of IMC's YLF, and our esteemed moderator, CA Girish Madhalkar, HOD, Accountancy, Shailendra College, for gracing this occasion and sharing their valuable expertise. Our sincere thanks to all you participants, all you students, without whose support, I don't think any event can be successful. And the more we see you on screen, or the more we even see you, meet you physically, the more successful our interactions will be. Thank you once again, all of you, for contributing to the success of this event. Your presence is a source of encouragement to all of us. Have a great day. Stay safe. Thank you.
Thanks a lot. Thanks a lot.